Hello everyone, welcome to Oliveboard. My name is Dinkar and I welcome you all in this session. I hope everybody is doing great, feeling healthy and fine. Once again, welcome to our previous year question paper discussion session. And as you all know that the series is really very successful. So we are continuing with this series, and again today we have come up with a very important descriptive answer of the finance. So you know that there are various type of technical things, technical related aspects are there which normally RBI asks. So these are a very important concept that RBI wanted to ask. RBI don't wanted to go inside a very deep thing. So they wanted to ask if something is there, if any new thing they are bringing up, whether you know that or not. So that is why this special series has been launched in order to make you aware about all these things, so that if any question in any of the examination you get like that, so you have a ready-made content for that, and with that we will be providing you the explanation also, so that you yourself get understood. Like if you wanted to explain it to the somebody, then you can easily explain it to somebody. Okay, so once again welcome to the session, and I'll just it's a great evening with all of you. So let's start with our session. So this is previous year question paper and explanation, and today we'll be talking about the targeted long term repo operation, or we call it as TLTRO, targeted long term repo operation. Okay, it is all related to the repo operation, but long term, and that too targeted. Okay, so please remember the word targeted and also remember the word long term, that is the second one. Okay, so the question is, what is targeted long term repo operation? So there will be a 400-word answer that you have to write. Here we are not providing you some model answer, we are providing you with the content. It's just like you have to select the things and you have to write. Okay, so in the starting, what is this targeted long term repo operation? Because this concept started during the 2020 when the COVID came. When the COVID-19 came, so all of a sudden there was a sudden slowdown of the economy, closure of the economy, you can call it as. Okay, so RBI wanted to extend the liquidity to the market, because there was like a very less liquidity. Things are not working, nobody is taking, like the things are not working in a proper way. So RBI wanted to increase the liquidity in the market. Okay, so RBI has asked the bank, like, you can take the liquidity from us, you can take the loan from us for the long term repo operation. Normally what has happened, repo is only for some few days, right? Most probably maximum for 28 days. But here RBI is giving you the loan at repo rates, for long term, Okay, so what is the long term? Long term is normally for 1 to 3 years, but RBI has put one condition over here, targeted. So whatever the fund the bank are going to get for the long term repo operation, or targeted long term repo operation, yes, so you have to invest at corporate bonds, commercial papers, non-convertible debentures, and there are 31 specific sector that has been recognized. In these 31 specific sector, you can take corporate bonds from there, you can take commercial from there, you can take non-convertible debentures from there. Okay, so because of the huge stress, because of the pandemic, RBI has come up with a very important concept, that is TLTROs. Okay, what to focus on the liquidity of the market, to provide the revival to the specific sector by linking the forward linkages, backward linkages, all the things together. And that is why RBI has said that TLTRO on tap scheme. Okay, so there were 5 sector that has been recognized for this. Then again 26 stress sector were also taken, that has been identified by the Kamath committee. KB Kamath is there, right? The Kamath committee has additionally recognized 26 more sector where the infusion of the money has to be done. Okay, so who are these 5 specific sector? 5 specific sector that we all called as severely hit sector are hospitality sector, tourism sector, aviation sector and travel sector, automobile sector, real estate construction sector, and insurance sector. These were the severely hit sector during the COVID time. So RBI has said that please provide loan to all these sectors. So we will be providing you the loan at the long-term repo. Okay, you will get the loan at a repo rates, and that too for the long term. Okay, so bank earlier normally bank get for the repo operation bank get up to 28 days, right? But under this targeted repo operation, long term targeted long term repo operation, you will be getting the loan for 1 to 3 years under repo rate only, under repo rate only. Okay, so in the starting RBI said that on tap LTRO they are wanted to distribute around rupees 1 trillion. It is not $1 trillion, it is rupees 1 trillion they wanted to distribute for the specific 31 sector for the revival of the economy. Okay, so this Kamath panel has said that we have 26 plus the 5 sector that we have discussed earlier. So they are power, construction, iron, steel, road, real estate, trading, wholesale, textile, chemicals, consumer durable, fast moving consumer good industries are there, non-ferrous metals, pharmaceuticals, manufacturing, logistic, gems and jewelry, cements, auto components, hotel, restaurant, tourism, mining, plastic products, manufacturing, then automobile manufacturing, auto dealership, aviation, sugar, port and port services, shipping, building materials, corporate retail outlets. So these are all the sector in which KV Kamath has said that we wanted to do the long-term targeted long-term repo operations. Okay, so basic feature is that here you will be getting the long period for a specific sector. 1 to 3 years of the loan you will be getting from the RBI under the repo rate only. There will be no extra charges on that repo rate. You will be getting it. Okay, so what RBI will do? RBI is going to auction the funds. Okay, and RBI will be asking the bank that you can only make investment in the prescribed corporate and other instrument which RBI is saying. Okay, so the main purpose of the RBI over here is that market should have enough liquidity. Okay, market should have enough liquidity and their yield are not going up. Okay, so we have to keep sure that the market should have enough liquidity in the market and the proper revival of the economy should happen and proper market should boost up. Okay, so this TLTROs are exempted from regulatory requirement like cash reserve ratio, CRR, or any other regulatory requirement that RBI wanted to put. They are exempted under that, right? So whatever the money that bank borrows under the TLTRO scheme, okay, they can do two things. They can purchase security from the primary market or the secondary market. Then there was also a launch of TLTRO 2.0. Okay, so here the bank has to invest some of the money in the debt instrument that is issued by the non-banking financial companies and microfinance institutions. So every time RBI is targeting like we will be providing you money at repo rates, long-term repo rates, but here you have to do investment. Okay, so like guidelines like 50% of the eligible instrument you have to buy from the primary market issuance and the remaining 50% you have to take it from the secondary market. Okay, like including mutual fund or non-banking financial companies. Okay, so then 2.0 TLTRO 2.0 they have said that at least 50% you have to give it to this sector, 10% you have to give to microfinance institution, 15% you have to give NBFC which are under the asset side 500 crore and below, and 25% you have to give to the NBFCs whose asset side is between 500 to 5,000 crore. Okay, so what are the benefits of TLTROs? First of all, this has been launched with the repo rates and for the long term. So here the bank will not be charged additionally. So the people will be getting the cheaper credit. The RBI is infusing the money in the market, so more lending can be done, and the more infusion in the economy can be done, the revival can happen. Okay, then RBI has also targeted that you have to invest in better places where the returns are good and profitability can come. Okay, and with all these things, there will be a boost in the economy that will happening by infusing of the money. Then there is a question like, has this kind of operation has ever been done at any other place? Yes, in 2008 and 2009, there was the financial crisis that has happened. Okay, international financial crisis, global financial crisis that has happened. Okay, so at that time, European Central Bank has given that concept. Okay, so European Central Bank has given the name as long-term refinancing operation, LTRO. Okay, LTRO. So European Central Bank has given this name, and we have given targeted long-term repo operation. So this is about the TLTROs, targeted long-term repo operation. Okay, so here we can see is a snippet from the newspaper. Like RBI has given some special finance to Nabard of rupees 25,000 crore, and they have also given rupees 15,000 crore to the SEBI, okay, for refinancing activities, right? So bank can also avail rupees 50,000 crore under TLTRO scheme, but they have to invest whatever the money they are going to get under TLTRO. They have to invest in grade bonds, commercial paper, non-convertible debentures, and NBFCs. Okay, so and then again, mid-size NBFCs, microfinance institution, you have to at least 50% you have to give over there. So here RBI has given like you will get the money for long term at repo rate, but it is going to be targeted where you are going to invest this. Okay, so this is all about the TLTROs scheme, targeted long-term repo operation. I will be coming out with new more videos, new more concept in the next session. Till then, bye bye, take care, and good night.